Hi, real estate investors and potential real estate investors. Thank you for attending our next session. This session will basically focus on the big disrupting concept of the wealth assist products and how they influence and change the approach to real estate investment in the distressed as well as the impaired real estate owners industry. So thank you for that. We will immediately jump in, we specifically will focus about the 4 keys, introductions to property investment, which the first is recreating the world through real estate. Here we talk about the way which the distressed property owner and the property investment industry is currently operating. We all know about the situations where most people will teach you or train you that look for the vulnerable, look for the people where you can buy a property at much below market value, therefore making good returns and profit from those situations in which the people find themselves. First of all, that is completely opposite to what the Wealth Assist is doing. We are basically using that same situation, but in our case, will provide products which will actually assist the real estate owner in the process, whilst making excellent returns for our real estate investors on the other hand. Now, we have basically got, if I can call it, 2 specific drives. The one is to help the owner keep his property in that case, or otherwise, if he's not able to keep his property, actually sell that property on, maximize the proceeds of that specific transaction, and make sure that he gets more out than what he would have in any distressed sale if that would have been the case. Now, obviously the first question is, how does it help you as the real estate investor? I think when we go into the products, you will understand a bit more with regards to that. So the second point is that Assist Group disrupts the real estate investment industry or the distressed real estate investment industry by, first of all, by providing prime +6 or more, depending on the risks, real estate investment opportunities, that is pre-vetted, predetermined contractual returns, so that the investor on the other side, whilst helping somebody else, can also make a great return with property as security. We have basically proven that through the last 8 years, whereby we consistently have provided real estate investment returns, which is far above the average that it's reached with any other products in the market currently, with specifically even through the COVID period. We have proven that that was still sustainable and it was still being a benefit for all parties involved. Then, very important is that all properties that is secured for investments with Wealth Assist is investments at 75% of market value and lower. That is all cost inclusive, even maintenance, etc. Those figures include the transfer fees, everything that is spent on the transaction, apart what we know as your bond fees, because we don't know if you need a mortgage or not. So if you have your own registration fees, that type of thing will be your cost, and what we call an external buyer fee, which is payable for us procuring your property or real estate investments. The third point that we're going to focus on is Assist Group SA is your trusted property investment origination firm. And with that, what we are saying is what we provide you on the end of the day. And here, this is important. We have our investors are people who are cash rich, credit rich, and time poor. That means you don't have the time to always search these opportunities yourself. You don't have the 40 years or whatever experience that some of our risk committee members have. I think our total is more than 100 years combined experience in the real estate investment industry. So to actually gather all that information and that knowledge takes time. And here we provide you a product pre-vetted, risk mitigated, and what it includes is a full turnkey solution facilitating the procurement, your risk assessments, your maintenance, looking into what maintenance there are, property management side, we manage that in the process as well, pre and post sales administration, as well as mortgage facilitation if you don't have your own mortgage originator, transfer and bond registration process. We prepare all those documentations prior, making sure that your rights are protected in this process. Also, a recovery of property owners and facilitation and resales of those properties if it needs to be. Number 4 is how Assist Group changes the property investment from good to great. I mean, we know the old story about the old man whose beard hung on the ground, and at the bottom of his statue it said, "This is the young man who waited for the price of real estate to come down." So we all know property is a good investment. It's one of the top 5 asset classes in the world. Many of the rich, we all know, has made and grew their portfolio and the assets and those type of things through a real estate investment. And therefore, using this, we have just moved away from the whole perspective which we learned from young. I was one of those people that learned from my father, who wasn't in the real estate industry, who actually taught, buy a property and keep it. That's the best investment, my son. So in that case, I have, in the meantime, have been privileged to learn a bit more and understand a bit more, still having property as the underlying security, but using the compound interest and making a difference by your investment in a much easier way, which we'll go into a bit more detail as you will see on the slide now. Still having property through the whole period as your security. We're going to use an example of an investment where we compare a typically buy-to-let property investment, which you buy at probably, call it, if you have a good deal, you buy at 95% of market value, or a new development. Maybe you have got a pre-purchase opportunity where you get it at 95% of market value, and we're using, just to make the sums very simple, work on R1 million transaction. So your investment is R1 million, and that means you're going to buy a property which the current market value is more or less 1,053,000. Now, if you do well with a normal conventional buy-to-let, you currently will probably get in the region of about 7% net yield. If you can get that, it's actually, you're doing very well. And then secondly, have a capital growth, if we look at the statistics nationally, of approximately 5%, which give you a return of about 12% in total as a net yield, before tax, obviously. If you take a recovery product, the same one, we're also investing R1 million. We will buy maximum at 75% of market value, which is then at the value of you buying a property of 1,330,000 plus, and you will get at least a yield of plus 2 or 3, depending on the risk related to that specific transaction, which immediately put you in a bracket where you are cash flow positive from day one. And then secondly, have a capital growth somewhere between approximately 5 to 7% predetermined. And this is obviously a massive difference from just buying a normal property investment where you don't know what, maybe it's 5% this year, but maybe we can go through a difficult time and it's not. So all those things need to be taken in consideration. Now, if we look at that, what you can see on this slide now is what we call the capital and rental of the two, comparing the two type of transactions. And if you look at those figures, you can see that in a 10-year term on R1 million, there's almost a R2 million difference on the investment returns. That obviously illustrates to you what we are doing here is putting you in a much better position. So if you purchase this property at R1 million, the two parties buying, the one buying a buy-to-let, the other one buying a recovery, the one that buys the recovery in this case will have an owner that will somewhere between 12 and 24 months always repurchase that property at a predetermined return. And being in a position where you bought it at 75%, you will always know that it's possible and the returns will be there. Now, where does the compound come in? The compound returns comes in that after 2 years, if you make a practical example, the client buys back, or the real estate owner buys back the property within 2 years, and in that case, he will purchase it. If your returns are, call it 18% per annum, will have a return of approximately 360,000. So what do you get out at that stage? You get out your R1 million capital plus your 360,000. So if you reinvest that money immediately, then in that case, what will you get out? You will get out 1,360,000 and reinvest that. So your returns on that investment will actually be on the larger amount. And that continues to happen in 5 different cycles. If you do 10 years, your difference is actually coming into almost 2 million rand after that term. So it really is no guru stuff or something funny. It's just using the compound returns. Yes, a lot of people have got the attitude, but I want to keep property. I want to keep it, and one day I want to just have that passive income. The difference is after 10 years, if you really want to do that, take your R1 million extra. Now you're ending up with 3.3 million, where you would have sat with one specific property, would have grown to approximately 2.3. Rather use that 3.3 to then buy with cash in a much better position, buy property at a substantial discounted value, because you have got the money to do that, and probably have returns of 10% instead of 7%, plus your capital growth, which will increase your returns. So yeah, I think that's in summary how we disrupt the industry at this stage, and we will jump into the different products, etc. after this. Thank you so much.